Insider trading. What is going on, guys, and welcome into the channel. So today we're talking about two different instances where we had the SEC actually charge somebody or multiple people for insider trading. We're going to be talking about what that actually means, what is insider trading, number one, and then of course into these examples, because they're not actually the same example. They're not two examples where somebody essentially front-loaded a stock or they bought a ton of shares before news broke or something happened. There's also a different example as well. So let us dive on into that. Of course, this comes at a, I guess, somewhat interesting time where we had some recent news about some members of Congress, trading stocks. Should that be insider trading because they have more information than us on policy and stuff that really could shape a lot of sectors? And we talked about that video, Nancy Pelosi, a while back. If you haven't seen that video, go check it out because we talk about what Nancy Pelosi's buying and how much money her husband made. Now, it's not just Nancy Pelosi. It's literally everybody throughout Congress, Republican, Democrat. It doesn't matter which side you're on. Everybody does it. And the question really ultimately is, should they be doing it? That's a question for another day. If you want to leave your thoughts, leave them in the comment section down below. Like always, I appreciate you guys for hitting up that comment section because all comments help with the algorithm, the holy algorithm these days, right? So insider trading. What even is insider trading? Well, here is the actual SEC's definition. Generally refers to buying or selling a security in breach of a fiduciary duty or other relationship of trust and confidence on the basis of material, non-public information about the security. Insider trading violations may also include tipping such information, and we're going to talk about when a person is tipped. So you could be someone on the inside of a company, get charged for insider trading when you really just tipped your friend, and your friend can also get screwed as well. So you can see how both sides can get caught up, and there's more here to talk about, but I don't want to bore you with the SEC's website because, who really cares? But what I do want to talk about is two examples. So here's the first example, and the first example here is Long Island iced tea. If you guys remember, this is actually going back to 2017. You may or may not remember if you are, someone who's been following the markets since then. You may have, but back then we saw a crazy crypto craze, right? Back in 2017, that's when Bitcoin made its initial move to 20K. Obviously here in 2020, 2021, Bitcoin blew past that, has pulled back since, but this went nuts. And so a lot of these stocks, a lot of penny stocks that we like to trade. Why do we like to trade them? Well, because they can drop a nice juicy press release. The stock's got a low float, means there's less than 100 million shares available to trade. The stock's a cheap price, and it can attract a lot of volume. What does that mean? If everyone starts buying on in, the stock can go 50, 100%, just like that. And in this case, Long Island iced tea actually went up over 300%, nearly 400% in one day. Now, why did they do that? It's because they came out and announced that they're pivoting in the blockchain direction, okay? They were going to change their name to Long Blockchain Corp. So think about it. When crypto's going crazy, Bitcoin blockchain's all in the news, Long Blockchain, right? That press release, that headline was so juicy at the time that traders took that stock up 400%. However, there was some stuff going on behind the scenes that a lot of traders who just jumped on that news didn't really know. And what that was, Eric Watson, who controlled more than 30% of Long Island iced tea shares at the time, he leaked news to his friend and his broker, who then passed it on to some friends and a stock promoter and here and there, and you can see how it gets passed along, okay? Now, according to the SEC, they bought 35,000 shares, or one of the guys bought 35,000 shares of Long Island iced tea shares on December 20th of 2017. They then sold those shares the next day, the literal next day when they dropped that news, right, of that name change for a profit of $162,500. Crazy. 2 hours after that pivot with the new name, the market cap went from 23.8 million to 92.6 million. You're just talking about these crazy crypto runners back in the day. So pretty much told a lot of people, hyped it on up, and you guys kind of get a sense of how that stuff happens today. And obviously to different extents, but you guys can see the Twitter promoters and the pumpers and stuff like that, how they talk about a stock and it can shoot up. Now, this is obviously different because we're talking about insider information that we don't necessarily know. If you're speculating on a stock and pumping it on social media because you have a big following and you're speculating, that's one thing. But if you actually knew that this was coming, that's a whole different story. And that's where you can get caught up. And this finally, after now, how many years is it now? We're talking, this has been like 3.5 years. We're talking about now, finally, the SEC is officially cracked down and they are now being sued. The stock was then delisted fairly soon after that, I believe. So just so you guys know, I believe in 2018, the stock was delisted in February. Okay, so it only lasted a couple more months before it got delisted, but pump and dumps, penny stocks, that's why people like to trade them. So that's that stock. Now, let's talk about a different stock that is also delisted. So you guys kind of get the theme here that a lot of these stocks get delisted, and for a reason, right? So here it is. SEC charges coupled with insider trading on confidential clinical trial data. So what is this? This is getting into more of the biopharm biotech sector, which, when you have clinical trials, right? Obviously, if you're someone on the inside and this data is good and we're about to drop our PR tomorrow that we had positive phase 3 data, that's big, or positive phase whatever. Now, if obviously if it's not good and they drop the news, the stock's going to tumble. It's going down pretty hard. So in this case, right, this has actually been settled to, now they have to pay $325,000 to settle the charges. This is actually recently, it kind of got to this point, but this happened a while back. And like a lot of these situations where it takes a lot of time to go through the whole process, the SEC and the suing and all that stuff, and going through all the information, obviously, it takes a while. Holly Hand was a senior product manager overseeing the drug trial for a company known as, at the time, Nerlestem, okay? This company, right, was in clinical trials and they were doing some research. And okay, when you go through that process, you get to a point, positive or negative, or didn't meet the primary endpoint, something along those lines, right? So allegedly, Hand learned the negative results coming from the trial and then tipped Chad Callis, who then sold all of his stock ahead of the announcement of negative news. So in this case, right, we're not seeing someone buying and making money. We're seeing someone essentially avoiding a loss, right? In this case, because if he hadn't sold those shares prior to that news, he would have taken a pretty big loss. And I'm sure you guys understand that it sucks when you take a pretty big loss because of a situation like this, an FDA not approved, or you get bad news, or there's an offering, right? So if you knew ahead of time it was coming, wouldn't it be nice, right? Yeah, for sure. And so he sold all those shares. The stock dropped by 50%. So, saved himself quite a bit of money. Now, he avoided losses of over $103,000, and his uncle avoided losses of about $14,000. So he had more people in the stock as well. Callis agreed to pay a $222,000 penalty, and Hand, so the person from the inside of the company that leaked the information, agreed to pay a $103,000 penalty. So now you're seeing that just because you leak the information, you're not the only one that's getting screwed here. The person you leak it to, they're getting in trouble. You're leaking it, you're also getting in trouble. So you can kind of see what we're talking about. But now this also isn't necessarily relating exactly to what we are talking about in a recent video going over Nancy Pelosi and what happens in Congress, right? It's a different situation because in this case, a lot of these insider trading situations, a lot of them are very similar to these, where something is about to happen in a company or it's going to happen soon, and there's a tip or there's something that goes along or some information gets leaked, and that's essentially what triggers this. Now, obviously, it's a different situation when you're talking about somebody in Congress who isn't getting insider information on the stocks they're trading. For example, like Nancy Pelosi buying Apple or Tesla or Amazon or Google, or her husband buying those stocks, right? It's not like, buying those stocks is going to be the same situation as, let's say, buying a penny stock or buying a stock, prior to an approval. That's a different situation. But we have to understand that they also have an inside view on a lot of the potential laws and the regulations and the bills that could be coming and the stimulus that could be coming for different sectors, which could benefit in general those stocks that they may be trading. So that's what we're kind of talking about. That's why it's different than these specific instances. But let us know in the comment section down below your thoughts on this stuff. I think it's honestly, it's funny and it's not funny. Obviously, if you're involved, it's a serious situation, but it's funny to look back and say, wow, people did this stuff. And at the end of the day, there are people that are getting screwed on the other side. And so those people are pissed if you're buying the stock up way too high, or if you're someone in this case who is holding this stock before that negative news comes out, before that negative trial news. You're like, well, this person saved themselves $100,000. No one told me. I lost half my money, right? So you can see that the real pain of this, obviously, going forward. So let us know in the comment section down below your thoughts on all this insider trading stuff, but just so you kind of have a better idea as to what really classifies and what the SEC's official definition is of insider trading. Appreciate you guys so much for tuning in. Hit that thumbs up button, consider subscribing, boost that algorithm. Any links and resources will be linked down below, free stocks, platforms, all that type of stuff. Appreciate you guys so much for tuning in. Check out our other channels in the description box as well, and we'll see you in the next video. Peace.